In January 10th this year, a Bitcoin ETF got approved. Now we have two instruments, Bitcoin and Bitcoin ETF. At first glance, they seem to be the same. Now, there are fundamental differences between the two of them, differences that you should know before making your investment. Just for starters, I'm going to say something very clearly. Bitcoin ETF is not Bitcoin. Let's clarify the difference between those two. Bitcoin is an innovation, is a new technology that's very likely to revolutionize the entire financial system and a lot of the things on the planet. It is a commodity. It is also the highest manifestation of property. It cannot be confiscated. It cannot be frozen. No one can reverse your transactions. It's available to everyone on the planet as long as they have an internet connection. It cannot be regulated by humans. It is regulated by the algorithm and by code. Now, ETF, on the other hand, it is a security. ETF is not a commodity. It is not innovation. It's just another instrument, just like ETF of gold, for instance. So it is a security. It is controlled by the government. It is regulated by the entities. It can be confiscated. People can stop your transactions. It is not available for everyone on the planet. It's only available pretty much on the first road for people who have a broker account. So how are Bitcoin ETFs being issued? How are the mechanisms operating? So here is what happens. When you decide to buy one Bitcoin ETF, you're going to go to your broker's account and credit that money. Now, you are the investor sending your money to BlackRock. Now, BlackRock's going to receive that money. In exchange, going to give you a digital receipt, which is known as a Bitcoin ETF. Now, BlackRock's going to take that money or that amount of money, send to Coinbase, and then buy a Bitcoin from Coinbase. But here's what happened. BlackRock does not receive the Bitcoin. The Bitcoin continues to belong to Coinbase. Remember, not your keys, not your coins. So in this case, every time you buy a BlackRock ETF, you are giving more Bitcoin to Coinbase. Now, Coinbase is very likely to have a record of how many Bitcoins are belonging to BlackRock, or they're going to put those Bitcoin on an account which is assigned to BlackRock. Now, that is how you buy a Bitcoin ETF and how the mechanism works when you're buying. Now, what if you want to sell? When you want to sell, you want to take that ETF and you're going to send that back to BlackRock. BlackRock is going to look at the value or the approximation value of Bitcoin and it's going to credit that fiat amount back to you. So it's important to understand that as long as you have a Bitcoin ETF, you only have an instrument that speculates on the fiat value of Bitcoin. You're never going to receive any Bitcoin from BlackRock or Coinbase as long as you have a Bitcoin ETF. That is a fundamental difference. You have one digital receipt that gives you the right to speculate on the fiat value of Bitcoin. So this entire mechanism got approved on January 10th. Now it's important to understand the SEC approved the issuance of Bitcoin ETF, which means ETFs will always be regulated by the SEC. Bitcoin, on the other hand, can never be regulated by humans. It's only regulated by the code and the algorithm that runs the Bitcoin. Also, another consequence of that approval, a lot of excitement occurred on the crypto space, a lot of people expecting other crypto ETFs to be approved, such as Ethereum. However, the Biden administration already wrote a letter to Gary Gensler requesting him not to approve any other ETF. I believe on the long term, an Ethereum ETF may be approved, but it's going to be more difficult to approve a Ethereum ETF because Ethereum is not just one cryptocurrency. Ethereum is a smart contract chain which has many other tokens on it. Many of those tokens are scams. So it's going to be more difficult for Ethereum to get approval than it was for Bitcoin, since there's only Bitcoin on the Bitcoin blockchain. Now, this Bitcoin ETF mechanism got approved on January 10th. Now, a lot of people are celebrating the approval without understanding how we got here. We got here after a lot of years on court case and a lot of appeal on court cases by Grayscale and other institutions. Gary Gensler, although he was a teacher of Bitcoin and blockchain university, he did disappoint the market because the market thought, oh, if Gary Gensler is running the SEC, we're going to have easier approvals or easier regulation for crypto, and nothing could be further from the truth. In my view, Gary Gensler approved this because he was seeing his job at risk and because of the court laws, not because he wanted to approve. And if you look at it now that the market is expecting an Ethereum ETF, the Biden administration already wrote a letter to Gary Gensler requesting him not to approve any other ETF. So even though there's an excitement, there's a lot of price performance because of the approval of Bitcoin ETF, there are fundamental differences between Bitcoin and Ethereum. Once the ETF of Ethereum gets approved, a lot of other tokens that are part of Ethereum also going to be approved. And to me, it's going to be much more difficult to have the approval of the Ethereum ETF. We're going to be making another video about this to you guys. So please subscribe to the channel so you're going to find out as soon as that video comes out. So here we have the letter which was written on March 11, 2024 to Gary Gensler. And you can see that the Biden administration is not happy with the approval of the Bitcoin ETF. Look at this. We write to urge the Securities Exchange Commission, the SEC, to take steps to protect investors following its recent approval of the listing of the trading, which means the approval of the Bitcoin ETF. So not only Gary Gensler was not happy, the US government is not happy with the approval of Bitcoin. Now, further on the other page of this letter, which is the most significant part, in my view, here on the second page towards the end, you can see that they really urge Gary Gensler not to approve any further crypto. Look at this. Finally, we believe that the SEC should strictly limit the precedental application of these approvals, meaning no more further approve. And it says, while the Bitcoin market has displayed serious weakness, it is nonetheless far more established and scrutinized than the market of any other cryptocurrency. And that's because, once again, the blockchain that has one single asset, BTC, the approval of the Ethereum ETF means the approval of thousands of tokens. Over 90% of those are indeed scams. Look at this. We do not believe that other cryptocurrencies show the trading volumes or integrity to support an associated ETP or exchange trading product. And retail investors would face enormous risks from the approval of such documents. So they're making very clear that they do not want any more approval. And they say that Gary Gensler, look at this, the commission is under no obligation to approve such products, meaning Gary Gensler does not have to feel compelled or feel obliged to approve any other ETF. So apparently, eventually I believe we're going to have an Ethereum ETF, but I don't think it's going to be as easy or as certain to happen this year as a Bitcoin ETF. So in this letter, we can see there is a new drama now, which is the approval of the Ethereum ETF. It's important to understand that Bitcoin does not carry any of those problems. As long as you're the custodian, nobody can regulate you, no one can stop you, as I already mentioned. However, I also want to clarify to you that there are certain benefits that are going to be offered in exchange for you giving up the custody of your Bitcoin. So for instance, if you have a large amount of Bitcoin, eventually there are going to be derivatives and revenue that you can make if you give your Bitcoin in exchange for a Bitcoin ETF. And that is a role that a Bitcoin ETF has for institutions. However, as an individual with a few Bitcoin, I do not see that role or that benefit being worked to you. Now let's talk about the pros and cons of the ETF approval. The ETF approval was a very good landmark for Bitcoin. After all, there's a huge increase on demand and change the narrative. Now I can talk about Bitcoin without people saying, oh, it's only used by criminals. I can say, no, BlackRock is heavily invested on Bitcoin. So besides the price performance, there are other benefits for large institutions. If you're a large institution and you want to have a Bitcoin ETF, you're going to have some benefits. You're going to be able to use the ETF as collateral to get some other financial benefits on a traditional market system. And it's going to be a matter of time before there are other instruments are going to be created as well. Instruments that maybe give you a revenue for having your Bitcoin under the custody of Coinbase or under the property of BlackRock. Those are the positive sides. What are the negatives? The negatives is the following. The ETF violates the all principles of Bitcoin as the greatest manifestation of property. Because remember, the whole purpose of Bitcoin is for you to be responsible for your money and no one be able to do anything with that. All those instruments are subject to regulators and human corruption. For instance, there's nothing stopping BlackRock or any other ETF issuer from fractionally reserving Bitcoin. Now, what is that? It is the following. I buy one Bitcoin ETF and BlackRock creates two certificates or two ETFs. There's no way for us to verify that. When Bitcoin is under your custody, everything is verifiable on the blockchain. Once they issue the ETF, there's no way for you to verify that. Even if they give an address. Let's create an example. You bought a Bitcoin ETF and you have an address and you have one Bitcoin saying that that's your address. How can you verify it? How can you be sure that BlackRock did not issue a second certificate to someone else on another country? This approach of delegating the property and the custody of your assets to a centralized institution has always been abused. I do not believe that in this case of the Bitcoin ETF is going to be any different. It happened to gold, it happened to everything else on the financial history. Another consequence that people are not talking about or looking at it is the consequence of incentives. What do I mean by that? Bitcoin itself requires education, requires you learn about wallets, cold storage, and so on, backups. Now you have the ETF, requires none of that, giving you less friction for ownership and holding the ETF. I believe most people will go for the route with less friction, meaning buying Bitcoin ETF. The more people buying Bitcoin ETF, the more those people are not benefiting from Bitcoin. They're going to be giving the power of their finance to the government, regulation, and institutions. While Bitcoin makes you immune to any regulation and any government, the ETF, as you can see, is heavily subject to the whim of individuals and corrupt government. So, in conclusion, there are benefits and there are trade-offs on having Bitcoin ETF and having Bitcoin. I, for one, defend the ownership of Bitcoin, but I do see the role for large institutions or people who have a lot of Bitcoin. And in the end, you need to decide where you stand. Do you want to have Bitcoin and benefit from the sovereignty, or you want to have Bitcoin ETF and benefit from certain instruments and certain benefits that comes with giving up custody? The decision is yours. I, for one, would not see any benefit or any money that justify myself giving my Bitcoin to someone else. But that's me. My question is, where do we stand? Do you believe Bitcoin ETF is for you, or you rather have Bitcoin itself? Let me know that on the comments below. This is it for now. If you did get benefit from this video, please don't forget to like, subscribe, click the notification bell, and above it all, share this video with someone else who can benefit from this. See you guys in the next video.